Hey guys, so welcome to my new YouTube channel, and today we are going to discuss about some business terms. So as you are seeing in the in the screen, uh, I'm going to discuss about these terms only. So what is EBIT? Earning before interest and taxes. Similar to EBITDA, EBIT excludes the depreciation and amortization expenses, but include taxes. It measures a company operating profitability before considering interest and tax expenses. As the language explains, it's simple, so you can just understand by those. What is gross profit? The difference between revenue and the cost of goods sold, COGS. It represents the profit of a company makes from its core business activities before deducting operating expenses. So you may know many people don't know about revenue. Revenue is just a earning which is on day to day wise. So it's like simple and other things I think it's more all it's simply it explains all in the line this. So we are going to discuss next term, net profit, also known as the bottom line. Bottom line or net income, it is the total revenue minus all expenses, including COGS, operating expenses, interest, taxes, and other non-operating costs. Mainly, it is the money which comes in your homes after for your expenses mainly. That's quite like a revenue, like after deducting all the expenses and the money you just save in your bank accounts. It's just simple as that. So what is operating income? The profit generated from a company core businesses operation calculated by subtracting operating expenses from gross profit. It excludes non-operating income and expenses. It's simple in in the line explains as we have discussed it above only. It is just related to that only. Free cash flow, as many people don't know, cash flow is just an statement which comes in the companies, which comes from the company, which are made by simply made company. So the amount of cash generated by a business after accounting for capital expenditure required to maintain or expand its assets base. He represents the cash available for distribution to shareholders, debt repayment, or reinvestment in the business. Simply, it means after saving the profit from the air or from the water, just give the net profit or the cash or in the form of equity, in the form of dividend. We just give money to your shareholders or your owners. That's all, I think. What is EBT? Earning before tax. I can explain it not by those. By learning, I can simply say you explain those term. It simply means if you are getting hired, earning like 10,000 rupees, and after eh, you you get the money before charging any GSTs or charging any values on those. Just get payment from directly from the bank. That's all thing, and you are not getting any taxes on those. In the company before in the if you have seen the financial statement of a company, there is like firstly balance sheets, assets, liabilities, and all things, and after all the things there is like earning before tax, that the profit before the tax, and after that we just minus the profit after tax, and that's the total earning of the company in the current year. NOPAT, operating profit after tax. A profitability measures that calculates the after tax generated from a company co-operation. It deducts taxes from operating income to reflect the net profit available to all stakeholders. I think I have already like explained you what is profit and after tax thing. So it simply means like calculating the profit after the tax deduction. It simply means that only. Like before, I have tell you, like in the financial statement, deduct the we just calculate the net profit before tax, and after deducting the like 18 to 24% as per the company or the as per the country's regulations, we just minus the taxes, and just that's the net profit of the company. That is all net operating profit after tax. So what is next term? Let's discuss like EBITDA, earning before interest, depreciation, and amortization. Interest is just like a simple term where we get money, where we give money to others, and we earn interest on those. And depreciation is just like when we buy something, just money deducts from year to year wise. If you like bought a phone like 10,000 rupees, after 10 year, like it deducts on percentage like 5%, 10%. It depends on the companies. Depends on many factors, but mainly like we as a company, we deduct like 5% to 10% every year, so we can calculate the perfect price of the phone or everything. Variation of EBITDA that excludes taxes but includes depreciation expenses. It measures a company operating profitably before interest, taxes, and non-cash depreciation charges. Okay, let's discuss now. I have already discussed the EBITDA. So let's discuss another term, contribution margin. The difference between total sales revenue and variable cost of representing the portion of revenue available to cover fixed cost and contribute to profit. It helps businesses assess the profitability of individual products or services. It mainly means the difference between the total sales of day to, as I have told you what is revenue. So total sales in per day versus or like and the difference between the cost of the goods to uh, to make the product, to make the final product. That's what it means of variable cost based the portion of revenue available to cover the fixed cost and contribute to profit. What is EBITDA? Earning before interest, taxes, depreciation, and amortization and rent. Similar to EBITDA, EBITDA includes rent expenses in addition to exclude interest, taxes, depreciation, and amortization. It is commonly used in industries where rent is significant operating expenses. It simply means when we have discussed EBITDA, it's just add where it just an add with rent more. We just deduct rent from net profit more in addition from EBITDA. We just add more expenses to just get the not a lot more like profit for ourselves, to get more money from ourselves, because it we have to some part of hide the taxes to earn some profit in our mind, to get ourselves to get money in our bank account. Hiding taxes is bad, but it also depends in like for middle class people it is bad to paying taxes, because in the middle class people don't know how to like hide the taxes, and in like rich people know how to hide taxes, because they like hide in the form of different the assets, liabilities. They just give uh, distribution, they give advertisement, and they hide the taxes in the many forms. So I think I have like cover all the topics. So that's all for that's all the basic terms I wanted to discuss. So thank you guys, and if you like the video and if you like the terms I have discussed, please let me know, and I will discuss on more terms. You can just comment down in the sections like which terms you want to discuss about in the next video. Surely. Bye bye. Thank you and subscribe to the channel.